Good Tuesday afternoon to you. Welcome to the John Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with one of my two co-hosts. We don't need two of them. We just need one. He is the man, Aaron Clark of HOA-related. How you doing, buddy?
I'm doing great. Glad to be
Good.
here again on this hot, smoky day.
Yeah, no kidding. I know. I was just thinking, I was taking a break before the show and I was thinking, I think I was sitting on my porch and I was thinking, I think I'm going to welcome the first time that I see snow falling. We complain when it's cold and we want the warm weather, and then when it's here, it's like, I think I'll take the snow falling.
Yeah. See, I like the weather of winter. I know that's weird. Everybody thinks I'm crazy, but also in my world, we are a lot slower in winter, so it's kind of like the break time.
That's true.
We're
That's true.
flipped for everybody. So I like the
Yes.
weather of winter, but obviously you can't do as much cool outdoor stuff. So I do miss that part. But I'm
Yeah,
looking
I
forward to
agree.
it
Well,
this year.
unless you're a skier or snowmobiler or something.
Yeah,
Yeah,
true.
which I used to many years ago, but just don't seem to do that anymore. I got tired of trying to lift an 800-pound snowmobile out of the hole that I got it stuck in. But
I
man, I love
bet.
that sport. I love that sport so much. Oh my God, I had so much fun doing that. Love it, love it. All right, well, Mr. Millard is tied up with some family events, so that's the reason he is not here. But we will take the reins from him and run with it here. All right, folks. First of all, what an incredible day again in the market. So I'm going to tell you about this record-setting day one more time. And you thought the gains were big yesterday. Well, they were huge today. So hopefully you made a lot of money in the market. I hope and pray for you. But let me tell you what we're going to get into after the stock market recap. We've titled today's show, "Could You Lose Your Home Even If You're Making Your Mortgage Payments?" Think about that for a second. Think to yourself, how can that happen? Well, if you came up with the answer of HOAs, homeowners associations, you're absolutely right. What Aaron and I are going to be focusing on today is what every homeowner should know about HOAs, property taxes, insurance, and foreclosures. Because you could lose your home even if you never missed your mortgage payment. Again, sounds unbelievable, I know. But what we're seeing going on is there's a growing number of homeowners, and this is a nationwide issue, that are finding themselves in foreclosure, not because they missed a mortgage payment or payments, but because of unpaid homeowners association dues, as well as other housing related costs that typically, as you will find out, create the problem with the HOAs. So we're going to discuss this growing trend and the steps that every one of you that are a homeowner should take to protect your home. Aaron, this is a great topic you came up with. What prompted you to want to talk about this? Because people think, okay, I pay my whatever $200-300 a month HOA fees, but when we've never touched on this topic specifically as far as the foreclosure, because it's almost a pandemic that's going on nationwide as far as the number of HOAs that are filing foreclosures in what used to be, all right, they're going to send you some nasty letters if you miss a payment or fall behind a little bit. But now, because as Aaron's going to enlighten us, because of the financial status that many HOAs find themselves in, because remember, folks, these are viable businesses. Now, just real quick, Aaron, most of them are nonprofits, aren't they?
The HOA companies?
Yeah,
Well, I mean, they're not registered as like 501c3s.
they're not.
They're
Okay,
for
for some reason I was
no,
thinking they were. Okay,
they're
they're
for
for
profit
profit.
because, they're making income from the homeowners, and then those
Okay,
proceeds are being used to pay for certain aspects of the property.
okay, yeah. For some reason I was thinking some of them were nonprofits, but yeah, that thinking about that or talking out loud, that doesn't make much sense.
Yeah, they have to
But
do
Aaron,
fundraisers and raise money, and
yeah,
no, they
yeah,
just call
they
the
they
homeowners
they
and say, "Give us money."
yeah, exactly. Here's your warning: put your trash can away, or we're finding you fifty
Yeah,
dollars. And
it's
if you
the
don't pay
HOA
the
golf
fifty
tournament.
dollars, HOA golf tournament, if you don't pay the $50 for the trash can being outside, guess what? We're going to file a lien against your house and start the foreclosure process.
Exactly.
Yeah.
Yeah.
So I don't know if you have any war stories, of clients that you've over the years that of that have got themselves in trouble with HOAs. But I remember years ago when I lived in Tahoe and we had an HOA, and I tell you what, it was just a nasty, nasty organization. I mean, they start off, I have a lot of trailers and things, and so we, split our time between the ranch and the Tahoe house, and I'd bring a trailer home, like to load stuff up or bring it back, and I think you had a 24-hour time period. Well, you bring it home on a Sunday night, and you're like, oh, okay, yeah,
Hmm.
I'll get it out of here, come Monday or Tuesday. Well, you don't. Well, here comes the nasty letters, and they don't mess around, Aaron. And that's the point I really, really want you to get across to people is people think these organizations have little legal power when in reality, as I know Corey has mentioned this many times, I don't know if you have, but many times they almost have more power than, say, your mortgage company from a foreclosure standpoint, right? And Aaron's shaking his head,
Yeah.
yep.
Yeah,
And so,
what people don't realize is that they have the power to even supersede like an IRS tax lien to
no
foreclose on your
kidding.
property.
See, I did not know that.
Yeah.
No
So
kidding.
and also, I mean, to clarify too, so when we use the word nonprofit, they are a nonprofit in the sense of like they're registered as such, but they're not nonprofit like a church or a charity or something like that where they're a 501c3, but they
That's where
don't
I'm
have
getting messed up.
shareholders
Okay.
who receive profits. So when
Okay.
we even though they are from the legal status point, we don't refer to them as nonprofits because of that
Okay. Yeah.
reason. Yeah.
Okay.
So
But
just to clarify.
technically they are, but just not a true 501c3. So, yeah,
Yeah,
middle of the
exactly.
ground.
Because
Yeah.
they're collecting money through dues, just like a nonprofit, and the
Right.
surplus of funds are typically used for reserve accounts, landscaping, things like that. So, but they're not
And
tax
folks,
exempt nonprofits.
okay. And folks, if you
Yeah.
want some really good, if you ever have a sleepless night, we used to
Yeah.
manage the funds for quite a few large HOAs in town. And I tell you what, I had to bone up, this was years ago. I had to bone up on the NRS statutes regarding HOAs. And I tell you what, again, you can't sleep one night, go to the NRS statutes and look and see what these organizations can do. I mean,
Yeah.
it's mind blowing. I can't, I hate to use slang words, but it is mind blowing the power that they have. And again, many people have no idea, Aaron, that they have that amount of power.
Yeah, the power that an HOA has is pretty crazy. And the reality of it is, a lot of people get into an HOA situation and they think, oh, it's no big deal. It's only a little
Yep.
bit of cost for this
Yeah.
HOA.
Yeah.
And
A couple
I
$100 a
can,
month, whatever.
yeah, and I can settle with all the talking points of what they require. But then, I mean, they can raise their dues anytime they want. I have an investment property that's in an HOA where there was a fire in the complex. And because of it, they just told everybody, you're on your own to get insurance. We're not covering anymore. We're just going to collect it. And then they raised our dues. Somerset
Jeez.
has a HOA where because of the retaining rock walls that are in Somerset, there was some issues when the builders did all of the infrastructure. And so, they needed money to fix them. So then they put an assessment on all of those homeowners in all of Somerset. Every time a home is sold, you have to pay for an assessment for the repair of that. The condos on Charlins on the way up to Somerset, I have a deal over there going. You have to pay now because one of the buildings is sinking. So everyone in the complex has to pay a flat fee once they sell to help pay to repair that one building, even though it's not their building. So at
Mm-hmm.
any time, if they need funds, that's where the nonprofit part comes from, is they're raising funds to pay for what's actually needed. There's not an excess that goes into investors or anything like that. They need it, they're going to get it. And if they can't
Yes.
do it and they can't be whole, then we have a problem on our hands because now you can't get a loan on the property. You know what I mean? Because you don't have. So what Dwight's not here to talk about is when you go to buy a property, the lender will get an HOA questionnaire from the HOA company and ask some things like what their accounts are at, all that kind of information, if there's any lawsuits, and what the owner occupancy ratio is. If there's any issues in regard to that, then they can't qualify for the loan on that property. So
So
all of
very
those
similar
things
to a
have to be
condo
good scale.
association. Very,
Yeah,
very
it's
with a
well, a
lot of those
condo
things you're saying is
association.
very similar.
Yeah, they are the same. I mean, a condo association, an HOA for a condo association is the same for the Somerset homes, for example,
Okay.
or Collin Ranch or Arrow Creek or whatever. If you have an HOA, a homeowners association, then they're all within the same rights, privileges, and powers, whether it's a condo, a house, or whatever.
See, I did not realize that because I've never heard about that with a friend, client, or myself with an HOA, like you were saying about the rock wall situation, having an
Mhm.
assessment like that. I obviously condos, you hear that all the time. That's why a lot of people shy away from condos. But yeah, in boy, especially if you're a newcomer and you scraped every dime you could to get into that home, and then all of a sudden here comes a nasty big assessment.
Yeah, you can get blindsided. And in some of those skyscrapers that were converted into condos, like that were old casinos, like the Montage,
Yep.
for example,
Yep.
they had major issues with the infrastructure for like the pool and the clubhouse area. There was a huge lawsuit. They needed to get the money from the homeowners for the differential. And so you got charged, I can't remember exactly what it is, like $100 per square foot. So whatever your property was, multiply that square footage by 100, and that was your HOA assessment to help pay for those repairs. So you have to
That'll
be
be
very
normal.
careful.
You got to be very
Yeah.
careful. And
Mhm.
boy, I can't believe it's already time for the first break. I mean, mentioned the market.
Sorry,
No,
talking
no,
too much.
no. It's fascinating. No, we'll hit the market when we come back from the break. But off the top of your head, or maybe you could research it during the break, what percent of housing tracts, let's just say Reno Sparks, or if you want to just pick one area, what percent of housing tracts are regulated by an HOA versus aren't? I think that'd be interesting because last time I heard, I mean, obviously all the new ones are, right? But and the other thing I want you to touch on too, Aaron, that just came to mind is people wonder, well, why is there an HOA? Many times developers, it's usually their idea, right? Correct me if I'm wrong. My experience is it's the developer's idea to create the HOA to maintain, good looks and quality and things like that. But then what happens is, of course, the developer's long gone. And here they created that structure and those rules and so on and so forth. They don't care. They don't care. They're long gone. But now the homeowner is the ones stuck to pay for everything.
Yep, exactly. And sometimes it's good because it maintains the
Yep.
quality of the
Yep.
area. So
Yep. Absolutely. And stops Aaron from leaving his trash can out.
that's
Just
right,
joking. Just joking.
which I do.
Do you have an HOA?
Yeah, we do. We have a
Do you
we have
really?
a city HOA.
A city HOA? I've never heard of
Yeah,
that.
so when you drive up the street, you have all the trees on the side of the road type
Yeah.
thing. That's a
Okay.
city HOA, so it goes to the city.
Interesting. Get you every
Hmm?
direction, don't they?
Yep.
Beautiful. All right. Well, again, great introductions. As you can tell, a very interesting topic that we're going to be going over. When we come back, we'll tell you about this record-breaking day on the market. Then we'll get to our topic. Could you lose your home even if your mortgage payments are current? With Aaron Clark of Edge Realty. Welcome back to the John Sanchez Show on News Talk 780 KOH with Aaron Clark of Edge Realty. Of course, Dwight, again, is tied up with some family events. He's taking a kid to college. I mean, it doesn't get much more fatherly than that one, I tell you. Good for him. All right, let's get down to the market, and then we're going to get back to our topic. Could you lose your home even if you're making your mortgage payment? I've been thinking since the close at 1:00, Aaron, how to summarize today's market activity. I wish I could say it was this, and this, three or four, primary reasons, but I really can't. And here's why. It goes back to this morning. So my first stock update, I'm looking at my notes, 523, of course. Dow futures are already up 640. What happened right before that? And we're, kind of up a couple hundred, carrying forward from yesterday. Treasury Secretary Scott Bessent appeared on CNBC, did an interview. And all he had to say, which I thought was strange that Trump chose him to say this versus Trump himself saying this. But Bessent, as a Treasury Secretary, said, we're going to have a deal either today or tomorrow with Iran. Strait of Hormuz is going to be opened up, free trade, kumbaya. And this market just ripped on that. Once again, just believe it. Now, remember yesterday with what we had 500 plus point gain on the Dow, it was Trump saying, Saturday he called off all military attacks against Iran. And then yesterday he said, we started negotiations today with Iran and, should have a deal soon. Well, again, we've heard that many, many times, of course. But then Iran throughout yesterday said, don't know what he's talking about. We're not talking to anybody, basically. And then again, the Treasury Secretary coming out, making those comments. So there's factor number one. Really, the main reason was carryover effect. These earnings numbers, the AI-driven fear of missing out type of situation, that was really, I'd say, 80% of today's rally. The other 20% was what I just mentioned about Treasury Secretary Bessent. But it was a record-setting day. Let's get to the numbers first of all. Record-setting day for the S&P, record-setting day for the Dow Jones Industrial Average. We're still struggling a little bit on the NASDAQ, and I apologize. I said something wrong yesterday, and it hit me this morning. I said yesterday was a trifecta. We had record-setting day for all three major averages. We didn't. It was the NASDAQ I forgot. We had that sell-off period, and we're still a little bit a ways from the NASDAQ. Let's see. We closed at 26,584. At 27,190. So, we'll call another 600-700 points on the NASDAQ, and then we get into record territory. But Dow and S&P yesterday record, Dow and S&P today record. Here's how we finished up. 907-point gain, 907 gain on the Dow, 1.71%, closed at 54,085. Aaron, I've shared with you where the Dow was when I started in this business in 93, right?
Yeah.
2,200.
5, 10.
2,200. Hey, wait.
Yeah.
Not that long ago. I'm not that old. Dow was at 2,200, and here we are at 54,085 today.
Crazy.
Remarkable.
Yeah.
So 1.71% gain, as I said. NASDAQ surging 671 points, 2.59, 26,584. And the S&P rising 136 points, 1.79%. To close at a record 7,736. I am not going to bore you because we want to get to our topic as quickly as possible, of all the major winners. I'm just going to hit a couple of them because it was right across the board. I mean, very, very diversified, well diversified gains across all various sectors. Let's hit some of the technology, the semiconductors, first of all. Marvel Technology today up $24.82, 12.81%. Intel, $9.94 gain, 10.92%. SanDisk up $139.59, 10.84%. Palantir, that I shared with you on the show yesterday, had blowout earnings after the close yesterday. That momentum continued up 29.42%, $36.96 gain. NVIDIA chimed in with a 2.56% rise at $5.30 to $211.94. One of the big catalysts of the Dow today was Caterpillar. Very strong earnings numbers early this morning in the pre-market. Stock finished up $46.51, 5.6% gain to $876.54. Another contributor to the Dow, Goldman Sachs, a $25.92 gain, 2.5%. JP Morgan up $4.88, 1.38%. Right across the board. But it was unusual. Amazon, which of course had some excellent momentum from the end of last week after the earnings report, started to sputter a little bit yesterday, did it again today in this very strong market. Amazon down $6.60, 2.32% rise to $277.42. Let's see. Yeah. Oh, I want to mention SpaceX before we go to break. So, of course, the first time since the company going public that they've had an earnings report. So let me just bring you up to date real quickly on the company. So in the regular session, SpaceX, now remember, just to give you into perspective, when SpaceX IPO'd, remember it was $135 a share, and then we went up to what, 160 and some change, and ever since have pulled back. So today finished up $11.53, 10.07% rise to $126.06. So now here's what happened on the earnings side of things. First of all, here's what the stock is doing right now in the after hours. It's down $8.07, 6.44% loss to $117.26. Now, here's the earnings side of the equation. So the company reported revenues of $7.81 billion. Expectation was $6.93 billion. Loss per share 9 cents. Estimated loss was 26 cents. So they did better on the loss per share, did better on the revenue side. Revenue up 92% from $4.1 billion a year earlier to loss of 54. Excuse me. Let me rephrase this. Revenue jumped 92% from $4.1 billion a year earlier, while the company's net loss narrowed, there we go, to $541 million from a loss of $1 billion. So again, since opening, remember the opening trade was $150 back on June 12th, excuse me. Stock's down about 16%, wiping out close to, as of today's close, obviously a significant portion of the gains. Last year, SpaceX lost $4.9 billion due to heavy investments in AI. Company merged with, of course, XAI in February, and so on and so forth. So space made $962 million. Connectivity made $4.2 billion. So that's got to be the Starlink side of things, et cetera. AI, $2.56 billion, beat the estimate of $2.18 billion. The operating loss of the space unit was $542 million. The AI unit loss, listen to this, Aaron. You're a numbers guy and an AI guy. Their loss from the AI unit, $1.26 billion. Folks, again, I got to bring reality to the conversation very quickly. And as you hear me go through these numbers, you hear me talk about this market at, record after record. We are on a house of cards, okay? Just to be real blunt with you. We have to watch this negative cash flow and these capital expenditures by all of these companies, not just SpaceX, by all these companies, right? We heard it last week when we had earnings numbers from a lot of the major tech companies. If something, right, Aaron, if somebody slips and says, we can't pay our dividend because our CapEx expenditures in AI, exceeded what we thought, whatever the reason is that they miss some numbers, or whether it's earnings per share numbers, they miss a dividend, something along those lines, that will be the first, we'll call it the Chinga game that we all played, right? That's going to be that first little piece that comes out. This is the only thing that I see that can really slow down this whole fear of missing out in the AI trade, the semiconductor trade, which is driven by AI, is if, remember, we had Google say they've got negative cash flow. We have Oracle that has negative cash flow because of their AI expenditures. So if you're wondering what's going to stop this market, that's your number one sign to watch. If one of these major tech companies has a miss in some form or fashion because of the amount of money they're spending on AI infrastructure and capital expenditures, that's going to be the catalyst. You agree, Aaron?
Oh yeah, absolutely. You got to watch that like a hawk.
Yeah.
And the thing is they're all in a horse race. So one's
100%.
great and number one for a week, and then it switches to another one because they just did an update. So I am very interested to see how this sort of scenario is going to unfold
Yeah.
over the next few
Yeah.
years.
I just hope and pray, I lived through, of course, the .com era, and I just hope and pray it doesn't end the same way. They a lot of people smarter than myself say it won't because this is actually a product. But is it?
I
I
mean, the
get it.
.com era couldn't prop itself up. The
Right.
AI can. So
Well, but AI is only propping itself up. The revenues aren't there.
yeah, no,
You
I mean
spend $1 to
spinning
get a penny
the
in revenue,
market.
spending the market. Yeah, exactly,
Yeah, and
exactly, and
all of
that's my
these
point.
like we've talked about before, a lot of these trading companies and stuff, they're using the product itself to generate
Yeah.
their wealth and
Yes.
investments and things like that. So I think it's kind of interesting when they talk about like how AI, because AI, if you don't carefully monitor what you have AI do, it will give you wrong answers. It'll
Of
make you
course.
feel great about yourself when you're
Or
wrong,
go rogue,
all
like we
kinds of things.
experienced with a couple models last week.
Exactly. So you have to keep an eye on it. So I wonder, in its own world of self-preservation, I know this is ridiculous as I'm saying it out loud,
Oh, what
what it
could you
can
say?
do to manipulate itself, if you will, within the market, which we've already seen. There's articles that have come out
Yeah.
talking about how it's
Yeah.
been able to do this. So, and even like different models that are happening, people are finding little
Yeah.
loops and holes and things
Oh
like
yeah.
that, and going to the CEO saying, "Hey, look what I can do."
Yeah.
You know.
Yeah. Yeah.
So I
Yeah.
don't know.
Yeah. 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 Talk about a self-fulfilling prophecy, right? But look
Yeah,
at
and how much
what
government money is getting pumped into it as
oh yeah,
well.
absolutely. The
I
government has a
mean,
vested interest. But real
yeah.
quickly, you look at the volume, the amount of business that is done every day, minute by minute on the stock market that is being handled by AI, by algorithms,
Hmm.
by AI, et cetera. It's, yeah, I don't know where we're up to now, 90%, somewhere around there. It's
It's
massive.
wild.
So yeah, it is. We're gonna have a show with you on that one. That's a fun one
Yeah.
to discuss. Very good. All right, you're up to date. Oil down $4.63, 75.73. All right, when we come back, let's get into our topic again. Could you lose your home even if you're making your mortgage payments? With Aaron Clark of Edge Realty. Welcome back to the John Sanchez Show on Newstalk 780 KOH with Aaron Clark of Edge Realty. All right, once again, record-setting session for the Dow and the S&P 500. We finished up 907 on the Dow, 1.71% gain to 54,085. Nasdaq higher by 671 points, 2.59%. S&P up 136 or 1.79%. As I said very quickly, let me hit it again. Oil prices down $4.63, 75.73 a barrel. This market was fueled this morning when Treasury Secretary Scott Bessent on a CNBC interview said, we're going to have a deal with Iran today or tomorrow. Gold rose $61.90, 4,151.76 an ounce. And we had a nice pullback in the Treasury yields. This was another major factor. 10-year yield down 6 basis points to a yield of 4.63%. And in the absence of Mr. Millard, how'd we do on the 30-year mortgage? Well, according to Mortgage News Daily, Aaron, down 7 basis points, but 6.75% on the 30-year fix. Ain't a budging. Ain't a
Not much
budging.
movement.
No, 6.75, hovering right there. All right, let's get to our topic. Could you lose your home even if you're making your mortgage payments? So, as Aaron and I said at the beginning of the show, you mentioned the word foreclosure, and people go, "Oh, that's caused because someone's not making their mortgage payment." But what if I told you this? What if I told you you could be current on your mortgage and you could still lose your home? A recent report highlighted that a growing trend among homeowners associations becoming much, much more aggressive in collecting unpaid dues. HOA-related foreclosure filings reached 6,376 properties in the first quarter of this year. That's nearly 40% higher than just 2 years ago. Think about that. 40% higher than just 2 years ago. And the reason, as you're going to find out, associations are facing rising insurance costs, just like you as the homeowner, higher maintenance costs, just like you, and higher operating costs. So, Aaron, let's start off with, why are HOA foreclosures increasing?
Well, I mean, you hit the nail on the head. You kind of stole a little bit of that thunder. The insurance premiums, just like they're raising for homeowners themselves with, or getting cancellations, things like that. The same thing's happening to the HOA companies that are managing these different communities and things like that. So as I explained earlier, a property that had a building catch on fire, the reason that they turned the insurance policies over to the individual homeowners, and this was in a townhome subdivision, if you will, was because they could not get an insurance policy to cover the entire set of homes
Mm-hmm.
within the complex. So they had to turn it over to individual homeowners because they would be judged differently than the homeowner association. So insurance premiums is a huge one. maintenance costs. We've talked
Can I
about.
stop you on that? Let
Yeah,
me stop you just real
absolutely.
quickly on the rising costs. You just brought something
Yeah.
back. So, folks, let's go back to what was it, a little over a year ago, the massive wildfires in Southern California.
Hmm.
I remember I covered this on the show, Aaron. You got, if you've ever driven down through Westlake and the hilly parts of Southern California specifically, you've got obviously thousands, probably hundreds of thousands of homes and tracts nestled in the hills, right, surrounded by weeds. After those fires broke out down there in Pacific Palisades and all that, Palos Verdes, these homeowners or these homeowners associations, to your point, Aaron, they were being dropped like rocks by
Well, yeah.
massive insurance companies because they're going, I mean, think about this. If you were the insurance underwriter and the actuary and you're going, let's see, I'm insuring what's a typical housing tract in SoCal, probably 1,000 homes. I'm insuring 1,000 homes plus all the infrastructure. No, I'm not going to do it. See ya. I don't care what your premiums are. And these companies, I don't know what they ended up doing. And I stopped following it. I imagine they went to the state fund that they have in California, as many states do. But Aaron, could we be facing something like that here? Right? I mean, we're no different. And look at the fires going on right now in Washington and Oregon and all across the West Coast. Unlike knock on wood, we're skating past it at this point. But we know what happens in other states affects us.
Yeah, I mean, the we call it the Californication of Nevada, right? Like there are changes coming that are similar and that we're experiencing some of the same issues in regard to those. And the truth of the matter is when an insurance company doesn't have to cover and they're taking huge losses, like they're going to have to cut their losses and run. And so that's a real reality of where things could go. So, you don't know. And the HOA company doesn't have magical money flow trees in the back that they can pull this extra money from to fund these things. It comes from the homeowners. So they're going to build in those premiums as best as they can predict. But when the insurance renewal rate comes for the
There you go. The
complex,
renewal. That's where it
yeah,
gets you.
and that renewal comes in 20% higher than it was,
If they're
then
lucky.
your HOA dues are going up. They're going to pass it on to the homeowner because they're not paying them. They're paying them from the reserves of the
Mm-hmm.
homeowners.
Mm-hmm.
So that's what people have to understand. And then on top of it, you have to understand that that coincides with that is remember all the cost of maintenance and things like that going
Yes.
up during COVID for products and whatnot. Well,
Mm-hmm.
we've all seen there hasn't been much relief. Like we were talking about that during the break.
Yes.
It's not like, oh, you paid 100% more for a furnace and it dropped back down to what it used to be. No, it dropped down like 50%. So those costs are being passed down to the HOA company, and that goes for materials when they're replacing air conditioners,
Sure.
painting
Sure.
roofs, whatever. But now you also have services, landscape maintenance, getting the
Everybody's charging more, and ultimately the
yeah,
consumer's going to pay.
streets being repaved or sidewalks or parking, guest parking areas, whatever, clubhouse maintenance, pool maintenance. I mean, all of those things have quadrupled in prices over the last
Yes.
10 years, let's say. So all of these things, the money comes from the homeowners. And that's where those costs are getting passed down and people can't afford.
When we come back, can you talk to the audience, Aaron, about the importance of underfunded reserves by the HOA and how they should do their due diligence, or their real estate professional should do the due diligence? Again, we used to have this discussion on condo associations. Now we're talking about
Yeah, they're
homeowners
all one and the
association.
same. Yeah.
Yeah, all the same. But we never talked about it with homeowners, right? Because it's a couple
Yeah.
$100 a month. But now we are. But talk about again what real estate professionals for their clients need to do as far as the due diligence going into a housing tract. Because the last thing you want to do, as you'll discuss, is come in and go, they're underfunded by $5 million. Well, it's obvious there's going to be some assessments coming, and you need to be ready for that, or go to a different housing tract. So we'll talk about underfunded reserves with HOAs with Aaron when we come back. Aaron, your phone number, please.
673-6700.
Thank you, sir. Appreciate it. All right. Fascinating topic. And I think we're probably going to have to continue this on the next time you join us, because we're on our first page here, and we got about 3 pages to go through.
Yeah.
So we're not going to miss it, or not going to make it. Again, could you lose your home even if you're making your mortgage payments? Aaron, we left off with the due diligence that needs to be done by the real estate professional and the homeowner, future homeowner, coming into a housing tract in regards to the financial condition of the HOA, right? The underfunded reserves. Go down that path.
Yeah, and the thing is, we have to be careful with underfunded reserves because if, again, they haven't been raising the rates, which I know we don't want them to, but if they're not raising the rates to meet the new standard of cost and they're underfunded, then you have all kinds of issues where you may not be able to qualify for a loan there because they're underfunded. Because that the lender's going to request an HOA questionnaire, which will have all this information. They're going to require a list of what their residuals are, their budget, everything, and make sure that they're in a positive cash flow situation. If they're not going to issue the loan because that is their collateral. So they don't want to have an issue with their collateral.
The special assessments.
Mm-hmm.
What happens there? You can't fight.
So in the special assessments, if they're short, so for example, they in their HOA budgetary line item, they need to replace the roof every 20 years. So they're going to take the total cost of that plus inflationary money, divide it by 20, and then that's what goes into your monthly cost over 12 months for that year. If they find out, oh, well, the cost has gone up and whatever, so we're 30% under, they might have to rush to get that positive cash flow up to where it needs to be. So that's where a special assessment comes from. It's not necessarily just because of bad things, like there's an issue with a building or landscape or whatever. Mm-hmm. Sometimes it can just be we way undervalued the cost to replace all the roofs in this complex or these. I'm using a condo as an example. So we're going to charge everyone a special assessment of $1,500 per year for the next 3 years.
Yep, happens every time.
Yep.
Real quickly, tell the audience who regulates these HOAs. People are going to be surprised at this answer.
Yeah, so the HOAs are regulated by the homeowners. So you get elected.
Even higher than that. The state I'm talking about.
Well, yeah, absolutely. So the state regulates these HOAs, and they're the ones that can come in and make sure that people are following the rules and basically hold people accountable for not doing what they're doing. And that's where you can lose your home.
Well, and again, you get this nasty assessment letter as an example from your homeowners association. They're being told they get audited by the state. I believe, if I remember correctly, when I studied the NRS regulations years ago, Aaron, I think Department of Real Estate, who regulates you and other real estate professionals, also regulates
the real estate division.
Yeah, real estate division, HOAs.
Yeah.
But there are very, very stringent rules on how they can invest their money very conservatively, certain reserve percentages and ratios and things they have to have. So if they fall below that, now they find themselves in trouble with the state. Now they're going to get in trouble. So it's saying, you know what, flows downhill. So I want to make sure everybody understands that. Quickly, how do you lose your home to an HOA?
Stop paying your bills and let the HOA company file a lien against your property. So even if you're paying your regular dues, if there's a special assessment and you're not paying that, they're going to warn you so many times, and then they're going to file a lien against your property, and then they will foreclose for the amount due.
Yeah. It literally could be for $100. They file a lien, they can foreclose. I've seen that happen where a vacation home, for example, people don't, quote, get the mail. They don't see the bill. Next thing they know, they're in foreclosure.
Yeah.
Some states can even obviously file the foreclosure if you're current. But Aaron, real quickly, what's the pecking order of who has more lien rights? We'll call it your mortgage company, the IRS, or your
the HOA.
There you go. Right at the top.
It's
of the
HOA,
list.
IRS, and then mortgage.
There you go. There you go. It's that big. Final advice for homeowners that currently have HOA or are looking to get into a tract that has HOAs.
Yeah, I tell new buyers to quickly drive through a neighborhood they're interested in because they go, well, can I park my trailer here? Well, do you see trailers parked there? That's a great way to find out. Do you like the neighborhood and how it's managed? Does it look like so perfect? Do you feel like you would be out of place? Those are the best ways to feel it. And then, of course,
the HOA agreement.
And then read the documents.
You sign your loan documents.
Yep. And we all have access through the title companies to get the HOA documents, so we can send those to homeowners and they can review.
Absolutely. Fascinating topic, Aaron. Thanks so much for bringing it to our attention. Appreciate you, buddy. Aaron Clark of Edge Realty. God bless everybody. We'll see you tomorrow on the John Sanchez Show.